Okay, so welcome everybody to our 22nd edition of the Icebreakers. My name is Hugo Paquin. I am the community manager here at TechQuartier, and I'll be moderating today's session. The session today is on a topic which I think many people didn't know or care about much more before the pandemic. I mean, like in the mainstream, perhaps if you're, of course, a professional in the field, you're into the topic. But this topic has hit the mainstream a lot with the pandemic and all the issues related to it. So supply chain is a hot topic at the moment. So this was what motivated us to organize a showcase of some startups working on new technologies and solution in the topic of supply chain finance specifically. In order to do this, so TechQuartier asked one of our collaborators, another member hub of the DE Hub initiative. This is the Digital Hub Logistics Hamburg. So they are our presenting partner today, and I'm very happy to have Eileen Schmuck from the Digital Hub with us today. And I know she brought a few slides to explain to us a little bit more about what they're doing. This will be short. We'll not keep the attention away from the startups too much, but I thought as we jointly promoted this event, it would be great to give Eileen a few minutes to tell us about their work.
Thank you. Thanks a lot. And hi, everybody. Yes, we already thought about logistics before the pandemic. That's right, as our name kind of states. So as Hugo just said, I'm just gonna shortly share my screen to give you a few insights on what we do. And you can already tell we're sitting in Hamburg. We're sitting really close to the harbor. That was just a boat honking next to me. So I'm sorry if sometimes there might be some noise disturbance, but what do we do here? In the Digital Hub Logistics, we actually connect companies, startups, investors, and research educational parties in one place. In one place, what does that mean? We sit here in Hamburg in the center, very close to the harbor, and we have like an analog space where people sit together, work together in co-working spaces, and they get together in order to work on specific projects, to get inspired by startups and all that. So who's actually sitting here? As I said, we're connecting especially corporates and startups within our ecosystem. And when we talk about logistics, and Hugo just mentioned supply chain, if you are an expert or even if you're not, you might be able to think about the fact that this is a very wide field. As you can see, our parties, they vary a lot from DHL to Dacosi. We have Ingenix, we have Helm. So when you think about the point of sale where you shop, but you also think about the ships going on global scales, you think about harbors, you think about street, about rail, and about the last mile. That's the variety of corporates and startups that come together here in the Digital Hub Logistics and that try to work on new solutions in that field. This is just a short overview of those partners and the variety we have here. But more interestingly, a huge map of all the startups in this field of logistics, because it is a field that is ever growing within innovation and logistics. And we have currently more than 80 startups in our ecosystem, all focusing more or less on logistics along the whole value chain I just mentioned, from production to warehousing, to the oceans, to air flight, rail, street, last mile, point of sale, and a few aspects that are supply chain overarching. And in those fields, you can see we have kind of topics where we can cluster a few startups, such as sustainability aspects where we have CO2 emissions, but we also have startups in the fields of hardware with sensor technology, or a lot of aspects going on regarding the whole field of data, such as data analytics, machine learning, and everything. And out of those startups, we also have startups that do work in the field of finance, closer or sometimes even a little further regarding the field of logistics. You will probably see a bit of that in a few minutes. So what do? We are not an accelerator. We actually believe in the fact of bringing people together on individual terms. And what we do is we connect people via events, via networks such as this today, to bring people together who are interested in a certain specific topic. Today it is about finance and logistics. We offer co-working, so people get together here on 5 floors and they meet and they mingle on their own. So we believe that startups and corporates who work in the field of innovation are adults. So they are able to work their own way, and that's what we encourage here. And we help them to co-create, to come together to create pilots for new innovations, to come together, corporate and startup, sometimes also startup and startup, who bring together their services to make a bigger impact. And sometimes it is corporate and corporate who come together to actually collaborate. That's in a very short nutshell what the Digital Hub Logistics is. Whoever has more interest in getting to know what we do, you can just check us out, or whenever you are in Hamburg, just stop by and visit us.
Thank you very much, Eileen. Love your slides and the sound effects I wrote in the chat. We were joking about it earlier, but very logistical soundtrack. Love it. I'll get back to sharing my slides here. So maybe about TechQuartier. I mean, you can see TechQuartier has a lot of similarities also with the Hamburg hub, in the sense that we are an analog space as well, physical location, only 2 floors, not 5, but you know, they're very full and lively. In addition to a space, we offer services and matchmaking and connecting different actors around the innovation table, right? So you can see on the left side and the right-hand side the kind of stakeholders that are taking part at TQ and what kind of synergies we're trying to build, you know. So whether it's corporates interested in discovering new technologies, investing potentially in companies, recruiting talent, we bring also that side. So we have a community of about 530 startups. Maybe 150 of those are tenants at TechQuartier. The rest are part of our broader network. And then we bring them together with you know, members of government, universities, corporates, in order to co-create and potentially find customers, right? In the case of B2B FinTechs, we have a large banking network. I have a short overview here of the kind of stakeholders that meet at TQ. So it's not an exclusive list, but you can see from the corporate side, lots of financial institution, consultants, you know, Deutsche Börse, for instance, and just a wide range of startups, of investors, and different stakeholders. But as I mentioned, I don't want to take the time away from the startups themselves. We're on a short timeline. They have 5 minutes each to pitch. So without further ado, I would like to get things off. Maybe just a few ground rules. Usually startups get 5 minutes. Questions can be asked in the chat. So feel free to type them in there. And then you can also ask them verbally, of course. Like, we want to keep this interactive and engaging. So you can unmute yourself and ask your questions too following the pitch. All right, so first I will then stop sharing my screen and ask if Lorenzo, you're ready to share yours and present to us what Sibill is working on.
Absolutely, thanks Hugo, and hi everyone. I'm Lorenzo. I'm a co-founder and chief of product at Cevil. At Cevil, we have the vision to make business finance simple for small businesses. And we want to help them better manage their cash flow in less time. This means for our clients, minimizing the time it takes to basically monitor and act on their cash flow, and also increase the likelihoods to survive and don't die due to cash flow problems. I said I'm one of the co-founders taking care of product. I did this together with Mattia and Dario. We are longtime friends. And all of us have had long experiences working with small businesses in their, let's say, in their liquidity, cash flow management problem. Especially Dario is a data scientist and has been working on credit and fraud algorithms to provide credit to small businesses. I've been working on fintech products for B2B. and Mattia has worked in let's say in the fundraising space together with Endeavor. So we have touched this problem, the liquidity problem for small businesses from different angles, and this gives us, let's say, the knowledge about the problem that we wanted to solve. And this problem is quite big and concrete, meaning that small businesses are the largest share of companies in Italy, but also in Europe. There are around 22 millions in Europe. And cash flow, the problems with managing cash flow are the main reason for failure for these companies. In fact, 82% of them mention cash flow as one of the main causes for failure. So there is a big problem. There are also big opportunities because we have today the chance to use like API and API gateways to aggregate their data. And we can make two very big, let's say, jobs like payments and accessing to credit much better by using enabling technologies and providing, for example, credit using transactional and commercial data in order to better evaluate the credit risk. So there is a big problem. There are huge opportunities, and this is why we're trying to give these small businesses a better way to manage their liquidity and cash flow. Talking about our solution, there are four main pillars. The first one is aggregating data in one place, because the simple monitoring job is quite difficult for these companies because their systems are silos and don't talk to each other. Think, for example, about bank, financial institution in general, ERPs and accounting softwares, where all this information regarding the cash flow is stored but don't talk let's say among themselves. So the first thing we do is aggregating all their data and provide them a cash flow overview, both current and future cash flow. Second one is payments, because B2B payments, differently from B2C payments, have remained extremely manual, and infrastructure has not evolved so much, so that the simple act of, for example, paying 50 to 70, maybe 100 invoices per month is extremely painful in terms of time it takes and error you can make while doing these payments manually from your bank. Then there is smart bookkeeping, because all of these companies need to basically stay on top of their cash position by matching payments with invoices. So the act of reconciliation today, especially in Southern Europe, is still extremely manual, so that these companies usually don't have the time to really know what bills and invoices have been paid and what not. So to understand the outstanding position in terms of credit and debits, and so the real cash position. And eventually embedded finance, mostly in the form of pay later solutions, because most of small businesses work on the edge when it comes to cash availability. And so the simple act of being able to pay later for a supplier, even for a smaller amount, it becomes extremely helpful for them to really go on in their operations. This is what we're trying to do. And in terms of approach strategy, we decided to start with Italy because it's a very overlooked market. Even though it's the biggest in terms of number of small businesses, we have 5 million here. And we're trying to focus, at least in the beginning, on very specific industries that really crave for this kind of solution, like B2B professional services, construction, and retailers like bars, restaurants, hospitality, and so on. Why it's time to do this kind of products? So the need is has ever existed, but now we have a lot we can work on when it comes to technology. Think of open banking, but API gateways in general. And there is a very good regulation, let's say, environment, because there is a lot of attention about the sustainability of companies from a cash point of view. And so this is the best moment to do this kind of products. And I will stop, so I stay in the 5 minutes.
Thank you so much, Lorenzo. Any questions in the room for Lorenzo, either through the chat or verbally? Maybe to break the ice, like about the current status of your business, right? Like in terms of employees and the kind of traction you're seeing in Italy. And are you present in other geographies as well in Europe at the moment?
Not yet, not yet. Our first goal is to consolidate in Italy. We are actually, let's say, in our pre-seed to seed phase, but we are active in the market. We have around 800 companies using the product as of now. So we're growing fast. In terms of team, we are 10 people, and the 4 people have just, 4 very strong engineers have just signed to start on July. So we're growing fast. We are also working on fundraising, and yeah, things are going well. The goal is to go to Europe in second half of next year.
Very cool. Any questions?
I have also a question for Enzo. You mentioned that you give a chance to small businesses as well. And can you please tell me what is the criteria, like how do you evaluate these businesses to give them invoices?
I can hear it very far, but I guess the question is what kind of small business we are targeting?
You said that you give a chance to small businesses to give them invoices, right?
Yep.
Exactly. And my question is like, by which criteria you evaluate these businesses to give them the invoices?
Yeah, I don't know if I got it very well because I still hear it far.
Sorry. My question is, you said that you give a chance to small businesses as well, right? And
I think maybe the microphone. Okay, yeah, it should be. Can you hear well, Lorenzo? Is it working or?
Yeah, no, it's better.
Okay.
Okay. And my question is, what is your criteria to evaluate these businesses? Like, by which criteria you kind of understand, okay, I mean, it's gonna be work and I give the invoice.
Yeah, so at the moment, what we do is aggregate data, including invoices, and give them basically a monitoring tool to know what's their cash position and what will be their cash position in the future by evaluating what are the invoices they will need to pay and need to cash out over the following like weeks and months. So we give them basically a real-time tool to stay on top of credit debits and really manage them by, like, for example, changing payment date and so on and so forth. We also give them the chance to reconcile. We do that automatically for them. And so in the end, what we have for this company is that we for example, know what are the average delays, like net days these invoices are paid and are paid from our customers. And later on, we will use this data to also evaluate these companies from a credit point of view, especially, for example, let's think of like factoring or invoice discounting. We will be able to use this, both the commercial data and the transactional data to come up with an estimation of the credit risk for every specific like supplier, clients, or every specific invoice. And we will use those data to provide credit on that.
Thank you so much.
Thank you.
All right. Thank you, Lorenzo. Moving on to keep things going. Next up is CashOnLedger. We have Eric Alborn, who's there. Can you hear? Perfect. Thanks, Eric. The microphone is yours.
Hi, I'm Eric. I'm from CashOnLedger. I'm a research analyst here at the team. And what we do is we enable data-driven business models for the Industry 4.0. The global industry market is projected to grow immensely to $337 billion in 2028. While at the same time, we see many OEMs to struggle to implement a monetizable and scalable business model. Fewer than 5% of companies have successfully executed a technological or digitally based transformation, and it is clear that there are many difficulties in implementing this digitally driven solution. And we observe the need for business models among users and of machinery manufacturers, as well as OEMs and investors simultaneously. And the users desire higher flexibility in cash flows and shift from their strategies from CapEx to OpEx. And the OEMs face these demands as well. And the technological challenges at the moment they still exist, but the main problem is with legacy systems, because they do not allow them to implement the coinciding business models. At the same time, the investors are actively seeking for new yield-bearing investments which could fund such models. And what could be the solution for that is asset as a service and pay-per-use business models. And the potential for OEMs especially is huge, and they could expand their business models and cover a significantly larger portion of the value chain, especially outside of the traditional machine sales. And the utilization risk as well is shared in such models, and the complexity for the user is reduced because they are just paying one simple rate depending on the usage of the asset. And with that, CashOnLedger is the bridge between the industry and the financial services, as well as the technological backbone for implementing such models in the legacy world. And our approach to this topic is holistic, which makes the asset as a service business model scalable. And we start at the start by supporting our clients and finding the individual business case. And this is essential for achieving a scalable solution in the process automation. We can provide a transparency over the asset's cash flow, usage, and as well as CO2 emissions, which is at the moment really gaining traction. And we take all the related business logic out of the client's ERP system and automatically integrate all relevant output data and put it back into the system. And with our platform, we not only deliver on the asset's usage related cash flow, but also, as I said, on the CO2. And how we do it is we take the IoT data from a vehicle, for example, or a machine, and we can then connect the data to a data lake if that's needed. But we don't take the data that is not necessary. We only take the data that is necessary. And if the OEM wants to take part in this and wants to do the client operation you can see on the screen, then that is completely fine. We only orchestrate the data that is coming from the IoT sensors and operated and orchestrated from there. And then the usage data is translated into dashboards, KPIs, invoices, and ERP-ready files. And in the next step, the financial platform enables the payment settlement as well as the integration of financing solutions. And for example, this product we have already implemented for over a year with one of our first clients, the Lindner Traktorenwerke in Austria, which is a pay-per-use based model because Lindner was facing demand from their clients to switch to more OPEX suitable business models and came up with the idea of renting out their tractors additionally to selling them. And this basically implemented a new business model on their already existing business model. And not only do the customers only pay for what they use, but they can also be charged a different price depending on the usage of the tractor. For example, if he is only plowing a field, he is charged a significantly higher price when he is only snow plowing something, because we can see how much usage or how much intensity has been going into the tractor from the IoT data that is giving us the platform. And so who is behind all this team? We have a management team of around 8 people, and in total 14 people in the background with the CTO and developers. And they all have a background in consulting, banking, venture capital, and we are very proud of amazing projects. We have been working with clients like BMW, Merck, and also the DVK's own logistical partner, Highlane, where we are implementing a logistically based solution to implement the customer of a logistic partner to have a pay-per-use model on their soil. So we are sitting in Cologne at the moment, and if you have any further questions, I would be excited to hear from you.
Great, thank you so much, Eric. Giving the opportunity to participants first to ask questions. Are there any at the moment for Eric? like personally, so I see the use case definitely when it comes to like machine rental and paying per use. Can you give some insights into the type from the financial side, right? Like, are there any financial products that are built on top of this, like special types of loan, or we've heard a lot about like tokenization as well. Is that something you've looked into, or?
Yes, of course. Yeah. Well, we have some financial partners on our side to give out the loan to sometimes acquire the asset and then tokenize it on the basis. So you can have a vehicle that is tokenized and then spread to different investors, so they all take part in collectively owning that asset, which is giving out concrete remuneration schemes depending on how much it is used, for example. So yeah, we have looked into that, and that is down the line, but at the moment we don't see the use case to be required at the moment, so we are focusing on implementing what is needed now. But on the long term, yeah, definitely.
Okay, cool. Any further questions for Eric? If not, then thank you so much for your pitch. Super interesting. Yes. Thanks a lot for taking. Next up, we have Thomas Richter from JITpay.
So yes, hello everybody. Just give me a second to share my screen. Okay, hi, I'm Thomas. I'm head of sales and head of product management at JITpay. JITpay is maybe the largest financial ecosystem for logistics. And we have a lot of services. We have a lot of financial services, very, very dedicated to the logistic industry. And let's point out one service, which is called, we call it JITpay Cash Management, but normally you know it as a kind of factoring. And basically you have two parties in the logistics. One, you have the carrier, and on the other side you have the shipper. And the carrier has one single massive problem, which is he always receives his money for his transport always too late. So it's normal in the industry that he delivers today and he receives the money for his delivery maybe in 30 days, 45 days, or 60 days. And in between that time, he has to pay his gas, he has to pay his truck, he has to pay his people, and this is not so nice. So in that case, for the carrier, which is our main customer in that field, we offer a kind of factoring, which gives the carrier the possibility to get the money as soon as possible. And when I said as soon as possible, I mean after 24 hours after delivery. And sometimes we are paying upfront by a proof of loading. And in every case, we protect him against all bets, because when he's paid, we have the risk. We eliminate also all the administration work, all the invoicing for him, and we protect him also against other financing costs. On the other side of the matter, we have the shipper. The shipper has a totally different problem. It's also massive, but it's totally different because the shipper wants to pay as late as possible. That means today is the delivery. If it's possible, he would like to pay after 90 days. And also for them, we offer our service and we take over all the payment he has normally to do to his carrier. We're going to do that. And we can expand his payment terms up to 90 days. And that's very interesting for the cash flow of the shipper. And we can combine these services to a central billing system. And that means at the end for the shipper, he only gets one invoice, he has only one account number, and he has only one creditor, and this creditor is JITpay in that case. So the old way of factoring, because factoring is not really completely new. Factoring is a business model in the industry, means you always have a minimum fee. You always have a minimum contract period of about minimum 12 to 24 months. You have a minimum turnover. You never know what you have to pay for your services, and that's the old way of factoring. What JITpay is doing nothing of that, because you don't have any minimum fee. You don't have any contract with us. Of course, we know our customers. We have to check our customers, but they don't have a minimum volume which they have to use with us. So it's very, very easy to use JITpay. It's only an onboarding. It's absolutely flexible. It's fixed and transparent fees. We only have 3 fees. It's 1.49, 1.99, and 2.99% of the transport price, and that's all. There's nothing more. There's nothing less. That's the completely fee. It's a pure pay by use system, and it's a little bit like PayPal. It's only for the logistic industry. At the moment, from the perspective of the expansion, we are expand our service all over Europe, and we are directly in the middle of the heart of the logistic industry. And we have a lot of partners. They work with us and use our services for their customers. So I'm 2 seconds over, a little bit fast, but I'm looking forward for your questions now.
Thank you so much. Any questions in the room for Thomas?
I'd be interested, because I know that you already have like more than, I don't know, 40, 50, 60, I don't even know, people working for JITpay. How large is your customer base at the moment?
I never talk about real numbers, but I think that the customer base is about 10,000 customers, more than 10,000 customers. I think we proceed about more than 100,000 invoices per month in our system. We are around 70 people at the moment. We are growing very, very fast, and from a turnover perspective, last year we were in a 3-digit million space, and we will make that 5 times higher this year.
Maybe in that context, for startups like Sibill or someone who's like still in the pre-seed stage, what were the biggest challenges you were facing in the beginning of like getting into the logistics sector?
No, that was not a challenge, because we are logistic people. And the biggest challenge is always the government, because you have seen we are spreading our services all over Europe, and we have the European Union, and the financial law in Europe, in every country, it's totally different. So we used to have a license for every country. We used to have a factoring license, a banking license, and a collecting license. And this is sometimes it's very easy, like in the Netherlands. Sometimes it's not so easy, like in Germany. So we have founded an own bank. We have our own bank, and sometimes we will never be able to offer our services like in Austria, because the legislation in Austria is very, very hard. So just let me end that from a perspective. Europe is nearly covered this year, or by the end of this year, and we are spreading our services also in the EMEA, in the US, and in South America.
Very nice. Thank you, Thomas.
Thanks.
Maybe for Austria, that's a business case for another startup. Maybe a rec.
That would be great to have. That would be great to have a partner there.
Yeah, right. Thank you so much.
Okay,
man.
thank you.
Thank you. It's like a compelling business model. All right, moving things along now to we have Julian from Carbonstack.
Yes, thank you. Let me share this. We're actually in the digital hub right now. So Eileen was sitting like 15 meters away from me when she presented. So we are based in Hamburg. We are from Carbonstack, and basically we're tackling one giant problem I'm sure everybody is aware of, it's climate change. And basically, if you look at the numbers, and it was pretty shocking this week to see that, a new study came out, and we heard that we might only have 4 years until we reach this 1.5 degrees. And this slide actually still says 7 years, so it's a little bit outdated now, maybe. And one of the biggest problems we see in the world is basically that we are not able to reduce our emissions fast enough in order to reach, really zero emissions before we will have those 1.5 degrees. And so I myself come from a science background, and what we as a founding team just saw was that carbon compensation is one of the biggest challenges we have right now, because we have to compensate a lot of emissions. And basically, if you look at the IPCC reports, you will see that the most likely scenario is that we will have an increase of more than 1.5 degrees of global warming. And then because we will have negative emissions down the line, we'll come back to 1.5 like 2100. And so it's a very long-term project. And one of the biggest issues that we always saw is that carbon compensation has a very bad image. It's considered as greenwashing, and it's very difficult for companies to choose the right products. And so our mission really is to make carbon compensation much more transparent and much more reliable. And you might say, okay, that's all well and good, but what does it have to do with supply chain finance? The point is that I think carbon compensation will be one of the biggest asset class in the future. There was like an article of The Economist a few years ago, like to reference, that said carbon compensation will be like big oil today. So basically like the industries will flip, because every company will need some sort of carbon compensation in the future. So it's extremely relevant as an asset for all the companies in the supply chain to become carbon neutral and to basically show to all the market participants that they do their part. So what do we do in detail? So we, like I said, our mission is really to bring more transparency in this market. So what we do is we basically do this 4-step process. So we look at forest areas right now, especially in Germany, but we're also looking at other areas like Scandinavia and other of the DACH areas. And we're basically looking at the areas and looking for the forest areas that are most damaged by climate change already. And we see that we can do afforestation projects there, because the forest owners just have a lack of liquidity in order to really build up the forest quickly, the carbon sinks quickly that we need. And we do that, we finance that, so we pay the forest owners. And afterwards, we do an assessment of the carbon uptake. So basically, we are modeling the biosystems there, and we are looking for the additionality. So we basically check what carbon will be stored if we do nothing. How much can we store if we do something? And then the difference is basically the carbon compensation. And we have a blockchain network that acts as a registry, which give more transparency in the market. So you can show very well which company is involved in which project and how big the impact is. And then the last part is that we check very regularly if the projections that we made in the second step are actually true or not. And we developed a remote sensing technology based on satellite images that basically screens the forests and compares what we predicted with what we see in the field. And therefore, we can build more trust with those images and see, is the forest that we predicted actually there, or is it another, I would call it, greenwashing project where the return in terms of carbon uptake has never been realized. And usually I show slides for every single step to explain, but we don't have a lot of time. So I will actually jump to the end, because that's the part most people are interested in, the satellite images. And I brought some examples. So basically, with a resolution of 30 centimeters of our satellite images, we're cooperating with Airbus there. And we developed machine learning algorithms that basically can identify every single tree. We can identify different tree species. And like I said, we compare that with our models that we did in the beginning. And with this process, we can ensure that all the carbon sinks that we create have a long-term integrity. And basically everybody, also NGOs and everybody who is interested, can look at the images. They can look at the blockchain registry that we have, and they can compare if reality and what we expected is the same or not. And if it's not, we develop new sites in order to offset those wrong estimations. That's basically it. If you have questions, you can get in touch. Like I said, we are in Hamburg. Yeah, if you have any interest in carbon compensation or climate change, just hit me up on LinkedIn.
Thank you, Julian. One question I have, and I think it was.
I would have one question.
Go ahead, Clara, please.
Oh, sorry. I think I have like a delay. I have one question. Can you say what like the ratio is between the right estimation and the wrong one? So how good your model is?
Yes, sure. So it's very hard to say for us the exact number because we're still in the development process, and so I can't tell you the exact number. So what we're seeing is we have like an industry standard with kind of 20% buffer in every single project. So basically what we do is we do our estimation and then we cut the estimation by 20% and then we tokenize what's left. And so if we see that our estimation is worse than that, then obviously we have to do something, and it's our task to find a new site where we can do another project in order to offset that. But it's not very likely actually that we would see that. And we can also build portfolios over different projects in different areas in order to mitigate any risks from very local effects, like one small forest fire or something like that. And then we can maybe some other side is picking up more carbon than we expected, and then we can do that.
So you check that manually also?
What do you mean by manually?
Whether your estimation was correctly, so how do you do that?
Yeah, right. So basically, if you look at the market right now, the process is very manual. So if you look at the standards that exist, most of them, are like people actually going to the site and measuring different trees, and then making an estimation based on that, if regarding the entire forest. And what we do is, yes, we're working with those standards, and we're also doing manual estimations. But our long-term goal is obviously to replace the manual labor with only the satellite images, because it's just a much more scalable approach and also the better approach, because you can identify every single tree instead of just picking a few trees and then making an estimation to the full area.
Okay, thank you.
Mm-hmm.
Thanks, Scott. Any other questions?
I would also be interested in knowing, like, how large is your team? Which phase are you in? What are your current? What's your current status?
Yes, so we started with this project with the company summer last year. We currently have a team of 9 people. We just did a seed round. We are basically right now, our status is that we are scaling up the projects. So I would say, so you have to understand that basically if you talk about afforestation, you can only do that in Europe in spring or fall, and not in the summer, not in the winter. And so we did a couple of projects now in the spring that really were meant to be test projects in order to see, does the technology work, does the business case work, what logistical problems do we get when we scale up the projects and so on. And now we are planning the scaled up version of all those projects in the fall. And so that's our main task right now.
Thank you.
Thank you, Julian, for your pitch and for taking over the questions. All right, last but not least, our 5th startup, Calculum. We have Eugene Buckley, who's there to represent Calculum. Eugene, the floor is yours.
Thank you, and hello everyone, wherever you are in the world. I hope you can see my screen. My name is Eugene. I'm one of the founding members of Calculum, along with Oliver Baylin. Our mission in life is we are reinventing the way companies analyze, manage, and negotiate better payment terms in order to generate free cash flow and make supply chains more competitive. We're a little over a year old. I come from a supply chain finance background, as does Oliver, my partner. I was one of the foundation members of a company called Prime Revenue, and Oliver founded Swiss Commercial Capital in the whole supply chain area. We're headquartered out of Miami. We have a number of offices, Hong Kong, Lisbon. I'm in Lisbon at the moment, London and Mexico City. I think there's about 15 of us, but that might change before the end of the week. So why did we do this? Why do we exist? if you look at this, there are two things that every single company has in common, regardless of its size, its industry, or its geography. They are both, you are negotiating payment terms with your suppliers, or you're negotiating payment terms with your buyers. And the way that is done is, before you negotiate those payment terms, you need to do some analysis on what your optimized position would be. And that's currently done on a spreadsheet. And as we all know, we all love a good macro. Spreadsheets are 38 years old, they're not a database, and they can't scale. So your option is to do that yourself manually, or you can employ expensive consultants to do it on your behalf. The challenge there is that you can, at best, because of the available data, analyze what are the best payment terms with maybe about 150 of your top suppliers. And that's the difficulty. So what we're delivering is a SaaS-based platform using AI that generates optimized payment terms automatically across your entire supply chain. So 10,000, 20,000 suppliers in a matter of minutes once we've cleansed the data. We think that the analysis is at least 30 times faster than an analyst or a consultant taking a couple of weeks to do 100 suppliers. And the cost point is probably at least 50% more cost effective. The platform's name is Ada. It's 100% automated, as I mentioned. Most importantly, your data is fully anonymized. So you only get to see the data that you see, and we have bank grade security technology. We only ask for 8 data points from the buyer to give that in a spend file. That could be an Excel spreadsheet or a CSV file. We do have API integration, but we start at a low level entry to get people going and not making it a IT project. You then get access to millions of data points from our extensive database, and we augment that with external data feeds as well. It's subscription-based pricing, and it shouldn't hurt anybody's pocket. And of course, the algorithms in the engine are constantly learning and fine-tuning, and you can create a number of alternative scenarios in real time. Let me just go back there. If I was to compare it to markets, before you put a supply chain and finance program in place, you need to be able to analyze and measure, is it worth me doing it, and where do I stand compared to my peers? What we compare ourselves to, if you like, is the foreign exchange and bond markets, in that if you look at those markets, everyone who operates in those markets can compare themselves to market as to price, availability, and trend. So we will, for our clients, we get them to a position where they can say, what is the average weighted payment term in this commodity, in this region, and in this time frame? So purely marking yourselves to market. What I'm going to do is do something very dangerous and go and show you something live, just to give you a sense of what the platform can do. And here we have what's known as our entity cards. And this is after the analysis, every single supplier with the position you want to take with them as far as optimizing your payment terms, the kind of characteristics, including their credit score, who's got the leverage, all the company details on the supplier as to what the payment terms are. Every single supplier, regardless of size, is credit rated, what the quality of the data is there, what their weighted average cost of capital is, all the information a category manager needs to create this argument. And if you look here, this is the negotiation screen. We will have a measurement as to what the regulatory terms are, depending on what country they're in, what the cash flow gain is. And our platform creates a script which allows the category manager to position themselves based on the data and request exactly what it is that they're asking. Once that's done, you can, and you've agreed on terms, you can input that information into the platform, what time period, and you can also select a number of characteristics or parameters which were associated with what you ask. So our data engine feeds back and allows us to learn more and refine the data. And I think that was a record pitch there. So hopefully we're towards the end, and any Q&A, please go ahead.
Thank you, Eugene. To Eugene's question, are there any questions in the room, in the audience? I saw you, there was a ESG mention as one of the data points. Of course, that's a big topic. We have other startups mentioned it, but I'm guessing that's not your priority, but probably an add-on further down the development roadmap, or because it feels to me that this would add like a whole other dimension to your solution, right? Like you would probably need more than 8 data points at that time, should you want to also provide some ESG scoring, right?
Yeah, no, absolutely. It's, we think it's very important because it's absolutely changing the dynamics around how you interact with your supply chain. So we actually will have an ESG feed, not ours. We've been talking to a number of ESG partners, and the question is to try and get as objective as possible. So we will be able to provide not just the credit scoring, but the ESG rating, and that's coming along the next development there. So people can, you know, get a more holistic view of these suppliers. I may not optimize to the maximum payment term. I may only do this, or I may put them in a supply chain financing program because they're rated, you know, a 3-star ESG. So to us, it's front and center, absolutely.
And is your product live and on the market at the moment?
Yes, it is. We have a number of clients. We're only about a year and a bit old, but we have some significant well-known brand names who are clients. And the beauty of this, in one of the slides, is whilst there are 200 million businesses in the world, we won't obviously be targeting them, but every single business. And we're seeing a very strong demand from the mid-market because they don't have the resources to, you know, necessarily engage a consultant to run this. And they are the organizations we are finding that want the type of tools that the big multinational corporates have, but at an affordable price range. And that demand is pretty strong in that mid-market area.
Okay. Well, thanks for the insight. And just to bounce back on something that was mentioned by, I believe it was Thomas, about the regulatory side of things. So you have offices, I think, on all continents from your first slide. Do you see any challenges there in terms of you know, availability of data or any other types of regulation that would require some harmonization on your side?
Yeah, so in terms of the data, I mean, you know, the main trading corridors, US, Europe, into Asia, Latin America, places like that, where the data is strong, it's strong. Where the data is not so strong, our engine does comparison characteristics between suppliers, so we can assess a supplier perhaps in Bangladesh or Vietnam where the data is thin. We will score that data according, saying it's light data or is it substantial data, but we will get, you know, we will form, the AI forms an opinion there, and as more data is fed in, then that only strengthens the accuracy of that. In terms of regulatory, you know, supply chain finance, been around a long time. I think it's an extremely beneficial tool for suppliers, but as the dynamics change, corporations are understanding that it's not just because you can extend terms to the maximum doesn't mean you should. And so our engine allows them to take a more holistic view and say, well, what's good for me in the current circumstance, and what is the market saying is the accepted payment term? So again, that mark to market. We do, as I mentioned, we do have woven into the platform the regulatory environments per country. So if there are countries that say you must pay these type of suppliers on day 30, then our engine will take that into account.
Okay. Dan, thank you very much for your presentation. Great stuff. And if you're exploring mid-market in Germany, I mean, you've heard from several startups based here or hubs that could potentially multiply your go-to-market efforts. So
yeah, no,
I have my business card.
Yeah, no, I noted that. Good.
Alrighty, then that concludes today's Icebreakers. So I'd like to thank warmly all the presenters today. So the 5 startups that took the time to show us about their company, their solution, what they're working on. So thank you so much. Also like to thank Eileen and the team from the Hamburg Logistical Hub. So it was great to co-host with you. And of course, to my colleagues, Kate and Sophie in particular, thanks a lot for your support in organizing this event. The next one will be next month, as this is a monthly recurring series. The topic will be ESG. The partner will be confirmed at a later date, but yeah, as we've heard today, ESG is becoming a very top of mind issue, and we will be exploring this with some of our community members next month. So until then, wish everybody a great day. If you have any questions, our team is available for them. Just reach out, and yeah, thanks a lot for taking part.
Thank you, Hugo. Appreciate it. Good luck, everyone.
Thank you.